Good afternoon, everybody. This is Dan Huss with ALGODayTrader.com, bringing you our NYSE session recap. It was a rather slow NYSE session. Most of the movement happened this morning surrounding news out of England and news out of Europe. The ECB and the Central Bank of England both having rate statements and press conferences abound. Let's start with the S&P 500. Not much has changed. Today we flagged inside of our support drawn 1642.33 anchor to highs. 1642, I'm sorry, quarter anchor to highs. This pullback we seem to be having into the end of the day. We're looking for overnight support at the 1650 area. Below 1648s, we're looking for support at 1642s, and then below there, we're looking 1630s. So really, it's like every 10 handles here. We have valid support levels, all in direction of both our daily 4-hour and now our 15-minute trend. There is an hourly short off the highs against this, but we have been unable to hold shorts inside of that level and have picked up in what look like longs now. So not look like, which are longs here. So maintaining that bullish bias going into the fourth quarter. The British pound, after our news this morning, we had a nice little spike into a high, and then subsequently going down to a 5-minute chart, we came off of highs, broke our Globex long, pulled into an ambush short, bit of a front run here, 4 pips. That traded to target. Next in the series here has been flagging all afternoon. This next in the series, 5-minute short, micro short, looks like it'll take us down and into the 15-minute or hourly full pullback drawn from our 54.29 swing low to our 56.83 high. That long is an ambush long where we broke a full short here, and now the market's pulling back into support. So nothing changed from this morning. If you saw either one of our other reports today, it's been the same story for the pound, looking for that full pullback, and has had 2 micro shorts off of highs. Well, one that is traded to target, and a second that now has traded its entry and flagged sideways. The Euro US dollar, stepping out to a 4-hour chart, we are looking for support down here at the 131 area. We have orders to buy 131.06 against a 130. Sorry about that, 130.20 stop. We're looking for the swing now up to the 136 handle from this support. Stepping out to a daily, we have held drawn from our 2012 lows to 2013 highs. We've come off of our full long. We have broken shorts, and this is ultimately this euro pullback. This is ultimately an ambush long in the direction of our swing towards ultimately a 141 target. So if this does trade and get free, we'll develop our trade plan and adjust our trade plan to potentially hold a piece of it to 141s, but ultimately we're really only looking for 136s. It's 500 pip target for under 100 pip risk is a pretty nice risk reward ratio to begin with. So let's get in this trade and get free before we start talking about longer term swing profit objectives. But I would be interested in holding this long for a swing up into the 141, 142 area. Going down to a 5-minute chart, 15-minute chart, we are able to identify the extension short that the euro has held 2 targets. It's traded multiple times here, each new low, drawn from the 133.05 or 06 anchor 2 lows. We held 132.20s into the news this morning. After the news, we then sold off and directly into targets here. So our targets align with the 131 level. Going same anchor new low now on this trade would mean that this full long would have the ability to get free. It is an 80 pip target at the 31.80s. Even if the short does win out, the next in the series for the shorts would be where the long gets free. So nevertheless, going down to an even smaller time frame here, Inside of this level, we held a full short, or a full long broke, and after the full long broke, after the news, we pulled into an ambush short. That ambush short, immediately following the news and into the NYSE Open, traded 2 targets. We have a next in the series short here drawn from a 31.73 to lows. This next in the series short has not traded. We're looking for 31.40 resistance into the overnight session into Asia, and ultimately a 131 area support. The next in the series short trades, micro short trades, it'll take us into that support level, and then I want to remind everybody that the 131 level is technically the target from the 132.20 short that traded this morning, and that means we would be pulling then same anchor new low and looking for the market to come off of that level as not only a entry for 4-hour longs, but also for our 15-minute short trend targets would be being hit there as well. The Aussie US dollar. It has traded down and defended a 618 line of its extension long. This same extension, the Aussie yen, has actually held and flagged inside of. So, kind of looking for potentially another push higher in the Aussie dollar. The move off the highs so far hasn't exactly been huge reversals yet, but we are still holding and next in the series short here, and ultimately above a 91.40. I think the Aussie could head up to a 92.20-ish area, but we'll see. We do have open gaps below us in the Aussie. We're so far away from that at this point that they're not really worth talking about. But I want everyone to remember they are down there because we are technically running simply into our prior resistance here at the 91.90s on the Aussie US dollar. So this is definitely a risky buy. If you were, I was able to get a long for D trader. We got long at 31 or 91.34. Is that right? Anyway, no, that's not right. We're long 91.22. There we go. I was able to get us long at a 91.22 coming up off these lows right here. We already got free, and our risk is only 10 pips at this point. So stops are, right down here. We're only there's no risk on the trade. It's already free, so there would be no taking it now. But those D trader clients were able to get you long with 10 pip risk. Took our first target, got free. And it's like a little lotto ticket for a squeeze. If the trend continues, this is likely where it needs to be from. So if it works, great. If not, there's nothing, no risk on the table. But ultimately, it's kind of trading at these levels. If we did get a solid break of this short, or I'm sorry, this long, I would be looking to pull back. I would be taking the ambush short, coming up off this major resistance level. So that's kind of on the watch tonight into this Asia session. Depending on which way the Aussie dollar goes from here, will be very, very important. So for the short term, the Euro Aussie, similar to the Aussie or the Euro US dollar, we are in an extension short drawn from the 46.14 anchor to lows. This 15-minute extension short traded a front run of nearly 10 pips, but it did get a reaction. It's also held a traditional inside of this little micro ambush short. So we do have downside targets of a 43, which would break the prior traditional after an extension, and would confirm the move back down into the daily 141.09 support level. So that's a very important support level on the daily. If we can continue and determine a series of shorts into that type of level, I would be interested in buying it and positioning for a swing. It is a much larger swing, so if I was going to take it outright, I would probably do half position sizing on it, or even lower, because you are technically risking almost just over 200 pips. 200 pips for, the gains are huge. You're risking 200 pips for 13 to 1400 pip gain, but the risk reward justifies it. However, risking 200 pips, at full position size for most people might be just too much. I know it would be for me. I can't justify that because it's not just 200 pips. It's 200 pips times however many units you trade. So with that being said, below the 43 handle, we're looking for 41s to trade, and that would be a major kind of wave 4 pullback, as well as the area of support for a swing trade long towards the 54 handle, and that would also benefit the euro-dollar trade as well. So long as the euro-dollar can hold the 41s, the Aussie-US dollar can continue to rally. The euro-Aussie will fall to the 41 level, and then the euro itself can rally altogether. Both the euro-Aussie and the euro-dollar can head to their 154 and 146, or I'm sorry, 136 targets respectively. Dollar yen has actually hit upside targets. It looks like it's wanting to go through them here in short squeeze. So next upside resistance would be the secondary targets around a 170 level. If we go above these 120s, which does look like the market wants to do, we're just sitting up there closing at highs. The same anchor new high extension is still valid, and this is drawn from a 98.53 anchor highs from August 29th. Same anchor new high here has support now at the 99.40 level. We are holding this purple traditional after with upside targets of the 134. So if we get to 134s, we'd be drawing from the lows at a 99.67 anchor to, whoops, there you go. We do get to that target. We'll have a next in the series traditional, and then of course keep dragging up the extension. But at that point, if we do go through, we're looking, ultimately looking towards the 170 level, where we'd be then drawing up new. We'd be then drawing a new extension using this high here at the 99.90 level from Tuesday's high to new highs as a brand new extension. We'll talk about that if we get there, but I will mark that high now, just to kind of keep it on our radar, so that we're not, so that we remember to look for it in the event that it occurs. Euro yen, not much to say. I got 130.70, 75 support, but it's been a mess. So it's been very choppy and sloppy to the sideways. So I'm not doing anything with it at this time. Not much to track, lower than the 4-hour chart. So the Aussie yen, as I said before, we are holding an extension long drawn from the 90.53s anchor to highs. We've flagged inside this extension, have upside targets of the 91.85s. If we do get a break in this extension, or a break in this short, I would be a seller. But I'm sorry, breaking this long, I would be a seller, as we are inside this big daily 4-hour extension short drawn from the 96.06 anchor to lows. But I'm not selling this thing until we get a break. It's come up here so strong. It's got a clear trend. We're able to find a break in that trend. We could sell the ambush reversal, but not a moment before. Risking 150 pips in the Euro Aussie, knowing that it's coming up off. I'm sorry, the Aussie yen, knowing that it's coming up off this major full daily pullback drawn from the 72 lows back in 2011 and 10 to our 105 highs. It's just a very risky trade. Above the 92.70s. I'm a buyer in a pullback. We're going to try to get long positionally the Aussie yen, and if you are long from really below 88, I mean, you very well might have a swing trade towards the 113. So consider holding that level, particularly while we remain above this short, and keeping pressure on it, because we could easily have a 100 pip rally here into the weekend, or even next week, and break the 92.40s and break that 4-hour short, which would be technically significant level. Then the question would be, okay, what do we do? What do we consider with these gaps? And unfortunately, at that point, we would kind of put those gaps in the back burner. We would assume that at some point in time in history they will fill, but we wouldn't be concerned with them any longer. Anything outside of a week if if by the end of this week those gaps don't fill, which they're not going to, I mean, I shouldn't say that, but we would need a flash crash style move to fill those gaps now by the end of the week. Outside of a week, if a gap's not filled in Forex, there's no good statistics on when it will fill. So it could be months from now, it could be days, it could be years. So this is definitely a gap up and go situation right now, and that was a little bit of what I was getting at on Sunday when I tweeted right after we took that Aussie short, right after, right on the open, it shorted up into a level. It got a reaction, 20 pip reaction off that level. We missed getting free by a couple pips, and then of course we got stopped out. But my point early in the week was, this is the type of trade you want to see move in your favor and cover that gap immediately. Otherwise, you want no part of it. And yeah, you can see what I meant by that. So we're ultimately watching the Aussie and the Aussie yen very closely. There's some good polls, good levels of invalidation to watch, and kind of stalking them at these levels because we're definitely don't want to be a seller yet. Not prepared to take risk in the market when there's clearly longs against it. But if these longs break, there should be good ambush setups in the direction of a swing lower. And I hope you guys are all kind of seeing that the way I do, and of the opportunity in the game plans, if depending on how price action plays out. So with that being said, have a great day, everybody, and we'll be back with you the London session tonight. Same link for the rest of this week. So we'll follow us on Twitter for access again. I mean, if you have the link, bookmark it. It'll be good for tonight. Then starting next week, we're going back to our normal paid services. Wanted to do a little promotional rebuilding period here. So have a great night, everybody, and we will be back with you as price action develops.